Welcome back. The show's called Brand Equity and I'm Sonali Krishna. For all those of you who've just joined us, we're in the midst of a heavy-duty discussion on the impact and implications of FDI in retail now that it's a policy and the challenges for retailers going ahead. So Biju, what are the challenges and bottlenecks you currently see in terms of actual implementation?
You need to bring in 100 million minimum investment. 50% of that investment in a 3-year time period has to be invested in the back end, and there's been a whole series of areas where they've defined as a back end. You can go up to a maximum of 51%. So what it does mean is that if you want to really look at a retail entry into this country, a foreign investor has to bring in 100 million, 51%. A domestic investor will have to bring in an equivalent 100 million, which is 49%, which is pretty close to 100 million. So which means that it's going to be a 200 million enterprise. 50% has to be invested of the foreign investment has to be invested in the back end, which is at today's rate approximately 250 crores. The third part of it is that the initial retail investments can only be made in those towns which have greater than 1 million population. So any state which is, let's say for example, agreed to this, you have to go there and find out which are the towns which are greater than 1 million population and then make your investments there. So when you look at it, what you need is a foreign retailer coming into this country has to find a domestic partner who's willing to today invest approximately about 550 crores to start with. And then secondly, wait and go state by state in order to make the retail investment. So when you start to look at it from that perspective, then you realize that, it's not so easy. I mean, you have to find first a domestic player who's going to be bringing in 550 crores, and secondly, then wait in terms of investing in each state. So it's not easy, but I think it's at least started the path forward in terms of opening up the sector to foreign players.
Nagesh, are you in agreement with Biju, and what do you see as some of the biggest challenges in terms of on-ground implementation?
Well, I think the first challenge and the bottleneck that I see is how are companies going to structure this. The structuring, because it is one country, one nation, one central law, one registrar of companies at a national level. How would they structure the organizations? I mean, in China, they started off by having multiple JVs, multiple SPVs, then they consolidated, then brought everything together. So I think there are challenges which are going to be in terms of the formation of this joint ventures, formation of the organizations to be able to get the FDI in. I think that's one challenge that you would have. The second challenge that you would have is, in your whole supply chain matrix, in your whole supply chain plan that you make for a nation, you'll have pockets in between who are not complying or who are not welcoming FDI. So you may want to look at that very differently.
What time frame do you see these macro changes happen by?
To me, people who have already come in, who have been with their partners for the last 15 months to 3 years, would start looking at it within the 12 months. So you'll see the first impact to the consumer, to the nation, to the tax, to the benefit in about 12 to 18 months time. People who have not come in are likely to come in the next 12 to 18 months time. And some of them may want to wait up to 2014 to say what's going to happen in the election and come after 2014. So I would say there are 3 kinds of companies who will look at this opportunity and enter India.
Well, I want to focus on which categories will really take off first. And Thomas, if you can go first on this one, which categories do you see taking off?
I see the food and grocery area taking off in a big way, which is where most of the international giants are really keen on. However, I see a very large traction in the area of apparel. I think that's going to take off in a big way. I think electronics is going to take off in a big way. And you've seen in India over the last many years a slew of local regional players. Now you're going to see maybe some big international players coming into this domain. So I think you're going to see across many categories, quick service restaurants, which anyway are really not affected. They were earlier also allowed to bring in their franchise, but these are in a way related to shopping and they're related to the existence of good multi-brand retail outlets. I think they're going to be facilitated in their growth with bigger shopping centers coming up with much better modern trade. It's also going to fuel growth for these people in the coming years.
Sure. Biju, any closing comments and possibly a message for the government?
I think, the FDI is the single executive action that the government has taken in terms of enabling flow of funds. There are several, other, laws which prevent you from running a vibrant retail business. I mean, they could range from things like, the delay in the adoption of GST, the labor laws which currently are prevalent in various states, which don't allow many stores to operate on a 24/7 basis. There are constraints in terms of employing women beyond 7 o'clock or 8 o'clock in the evening in a retail store. There are things relating to the Essential Commodities Act which limit the quantum of produce, let's say, which kind of specify the limits in terms of how much of oil can you keep in your store, how much of cereals can you keep in your store, etc. So there are those issues which are there. So there are several of those kinds of issues which I think also need to get addressed in order to create a vibrant retail industry. As of now, it's one executive action which has enabled flow of funds, but that doesn't mean that there are, that there are no execution challenges. And I'm sure when you look at it at the local level, all of these will become executional constraints which need to also get addressed over time. And I'm sure as you start on this journey, you will find state governments getting a lot more progressive and wanting to actually attract investment and make the change as far as their consumers are concerned. And a lot of them will actually start repealing some of these age-old acts and replace them with more friendly and contemporary acts.
Absolutely. Very pertinent points coming out there. And Nagesh, over to you for your closing comments.
As somebody who's been party to the retail industry in the last 20 years, I've always said that it is capital intensive, it requires money, whether domestic or international. We have seen a lot of large houses in the country from the domestic sector who are putting their money because they believe in this. I believe that opening up of international retail stores, opening up of FDI will upgrade systems, will upgrade supply chain, will upgrade the people and their ability and their skill. And we are actually going to first see the benefits for the consumer, second see for the supply chain, and finally I see that the tax impact, the sales tax collected, the GST collected, the VAT collected all throughout will help the country actually garner much more taxes and therefore reduce the fiscal deficit.
Right. And finally, Kishore Biani, if we can bring you in, and your closing words for FDI and retail now becoming a policy.
I think very difficult to predict, but we believe that once a consumer, let's suppose we are all, we move around, we have cousins living somewhere in Gujarat and we have some product available in Maharashtra and Gujarat not having them. Why should a consumer be deprived in some other state? We'll see a lot of changes which will come about as things goes by, because the overall, if the benefit of modern retail is win-win-win for everyone, there is no reason why states can't get convinced tomorrow.
Thank you so much, gentlemen, for joining us and giving us your valuable time. Truly a very, very invigorating discussion. Let's take a look at some of the key takeaways from this discussion. A very good move from the government, but only the first step in creating a competitive retail environment in the country. B, currently a lot of safeguards in place to protect SMEs in the country, and with only 9 states and 3 union territories on board, the investment may be too large for many foreign investors. Plus, don't forget, the level playing field will be really narrowed down. C, big challenge in terms of investing half the total investment of $100 million in the back end, considering a lot of states currently are not on board and are not FDI friendly. D, we can expect to see this policy move from paper to implementation in anywhere from 1 to 3 years. And last but not the least, the category that will see the maximum traction in the short to medium term will be food and grocery, other fast-moving consumer products and apparel. And with that, ladies and gentlemen, it's time to bring the curtains down on this special presentation of Brand Equity. We'd love to hear from you, so do write in to brandequity@etnow.tv, or alternatively, text us at 58888 with your feedback. Also, do take the time and log on to our Facebook page, that's facebook.com/brandequity, to start a conversation with us or to dip into our archives. You could do the same on Twitter @BrandEquityLive. Hope you enjoyed the show. Until next week, sayonara.